Thank you, Noel, moderator. And thanks, Nancy, for that beautiful poem. I really loved it. Yes, welcome all of you to Power Monday. We are glad to have you. Power Monday is hosted by Live Your Dream Enterprises Limited, a capacity development organization. And now we have the pleasure to welcome him, Dennis, that you may be able to share with us some wisdom. We want to know whether this thing is a scam or it's a reality. We want to know whether it belongs to everybody or it belongs to somebody exclusive club. We want to know whatever can make us either make our year better or by using it or avoiding it. Thank you. Yes.
Okay, great. Well, thank you, Mr. Otieno Paul Peter. I don't know why your names are in reverse like that, whether it's deliberate.
Very
I had
deliberate.
I had
Very
someone.
deliberate.
Oh, great! I had someone refer to you as OPP, and one of the things we are taught as journalists is to make sure we get names right. So, well, thank you so much. I'm so grateful that I got this invitation to join you guys this morning. I've never heard of this, to be quite honest, and I'm very impressed to hear what you guys are all about, what you stand for. And I heard Lady Noel talk about a brief history of when you guys started during COVID 2020. And it's a really great platform and opportunity to quite share. I heard some few people talk about their careers, what they do, as you've rightly mentioned mine. And Lady Noel talked about Monday being, people think it's a very boring day. Monday is actually my best day. It's always my best day, and I'll explain why it's one of my best days. It's not just the day that sets the mood for how the entire week will turn out, but as a trader, I love Mondays because that's when the markets open and that's when we can go out and do business, as I will explain a bit later. So I have, I think, 40 minutes or so. I will try to do justice to the time. I know I'll not be able to, because when we talk about Forex trading, it's such a vast topic, extremely vast. And I'll just try to compress a couple of ideas just to get some of you just to better understand whether this is a scam or not. I initially, to be quite honest, thought it was a scam when I was starting off. And it took me a while to get convinced because my nature as an investigative journalist is one where I question everything. I question everything. And I was taught in my formative years to listen to what someone is not saying in what they're saying. And so that for me, again, to get me convinced into something is a bit difficult. So developing that over the years, and then finally getting into this business took time, as I will explain. So allow me to go off screen because I want to share my screen. It's basically a presentation that I have, and I encourage, if you have any question, if you're getting confused on something I'm talking about, just write your question or your comment in the chat section, and then I'll try answer as fast as possible. So just a moment as I try to share my screen, and hopefully you guys can see this.
Yes, we can.
Great, fantastic. So I'll go straight into this. We're talking about Forex trading, but I love giving this disclaimer, and it's very important. It's a requirement when we talk about at a professional level, when we start talking about, financial instruments, things to do with trading and all that. The information provided here is for information purposes. And you should not misconstrue things I'll talk about to contain investment advice. I can only share through experience. The risk warning part of it is when we talk about CFDs, these are financial instruments, complex derivative products. They're traded outside an exchange, and these products come with a high risk of losing money as much as you can also make a lot of money. And this is due to something we call leverage. And so it's not appropriate for all investors. I know what normally is shared out there is anyone can trade Forex, but it's not true. You have to have some level of discipline and commitment and understanding before you can start thinking of how you want to get into this. And I always like talking about the risk management part of it first before you can start thinking about profit, because everyone wants to make money. Everyone is here because you're doing something out there. Either you're running a business, you're going to work. At the end of the day, it's all about money. But when it comes now to owning your own business, or when it comes to trading your own money, taking out either your salary or your savings and putting them as an investment into something, what we normally lack is due diligence in the risk that comes with it. And so for me, it's one of my favorite topics to start with that. I know Mr. Otieno Paul Peter mentioned and talked about a bit of what I've done. I currently wear 3 hats. And one of the hats is I'm a journalist, an investigative journalist. I also do consultancy in this. I'll come into that a bit later. I'm also a trader, and I'm also a mentor or teacher or coach, whatever you like. And the third thing is I'm also a brand ambassador for Exness, which is a global, a leader in the global world when it comes to trading. So this is a brokerage firm that gives you, as a retail trader, a platform in which you can trade on. So I'm the brand ambassador, but I'm not here speaking as the brand ambassador for Exness. I'm here to speak as Dennis, the journalist, and Dennis, the trader stroke mentor. Okay, so I mean, in brief, this is just a pictorial of some of the places I've been and some of the things that I've done. I've worked in some of these stations in different capacities, and it's been an exciting journey, to be quite honest, for me. It's been really, really, really exciting. And I like sharing this because, you know, I like sharing a bit about my approach and who I am, because I firmly believe in understanding the why behind what people do and why things happen, not just the what, which is mostly what most people go for. So I question a lot, like I had alluded to earlier. So this philosophy is at the heart of my trading, is at the heart of my teaching, and also mentoring. It's about digging deeper, going beyond the surface to grasp, the motivations and the reasons behind trading decisions. And so this approach doesn't just apply to understanding the market, it's also about understanding myself as a trader. So I wear those 3 hats, like I said, one as a trader, one as a brand ambassador, and one as a journalist. But all these things have helped, they've basically helped me as a guide to navigate the technicalities of Forex trading, even through the psychological aspect of it. Okay, so it's a unique journey that has brought me to where I am today, and I'm excited to share some of those insights and experiences with you, but more on that later. So Forex trading is basically a journey of both skill and self-discovery. Understanding the why behind our actions is just as important as the actions themselves. So I've worked for 20 years, immersed myself into the world of investigative journalism and news reporting. So why that makes sense in our discussion here is that those 2 decades of uncovering stories, interviewing people, uncovering truths, getting into deep research, analyzing reports, trying to understand complex situations and giving it a language that can be better understood by you as my audience, that experience has helped me in my ability to look beyond the obvious. It's a skill that's so invaluable when it comes to Forex trading. So my journey, taking me through those, many extraordinary experiences and holding different positions, one as a certified war journalist, trained by special forces, that part of my life taught me about risk, taught me resilience, and the importance of quick, informed decision-making. Again, these are skills that are so crucial when it comes to high-stakes world of trading. And in addition to that, as a, Bill and Melinda Gates 2018 Goalkeeper, that role helped me to understand the commitment to achieving the 17 global goals for sustainable development. And it's here that I learned about global dynamics and factors that can really influence different areas in our lives, from health to agriculture, and how all these different sectors must engage in smart investment for sustenance. So all those things have really, really helped me. But currently, I left full-time employment in 2022, and today I do trading professionally. And like, OPP alluded to, I'm the founder of Okari Global. It's a consultancy firm in media and an academy in the financial markets. Well, I started trading. If I can just go forward, is Forex a scam? Well, I'll take you back to 2016. This is when I started, as I was working, started trading. And I did it as a side gig, or what most people call a side hustle, to supplement my salary. I never wanted to dig into my pockets to travel, go for vacations, buy nice things that I wanted for myself. And so I wanted another revenue stream. Now, in the world where I was working as a journalist, it's so intense that you don't have a lot of time and space to do so much out there. So Forex trading was so easy and came so naturally because I'm only doing it on a computer. That's all. I only need access to the internet, a PC, or a laptop, and that's all. So I engaged myself in learning and honing my craft. And it was not easy, let me be honest, because I would leave work late at night after the news, and I would spend hours and hours reading, learning the craft. And through that journey, I met scammers. I lost money. And it's a long story. Let's just say I've seen the good, the bad, and the ugly side of this industry. But later on, I learned to interpret how global happenings impact the markets. So it's ideally turning news into valuable trading insights. And this ability to connect the dots really between the world events and market movements. A perfect example is during COVID. During COVID-19, a lot of people made money. Okay, I made money, I know. And it's through such situations, such events, when you talk about natural disasters and other things, that helped other people make money. Zoom, for example, we're using Zoom here. If you look at the graph for Zoom during COVID-19, the company, in terms of its value, rose so fast in millions and millions of dollars. And before then, not so many people knew about Zoom. So it's these global happenings that helped me understand how all these dots connect. So my aim right now is to combine my experience to create, a mentorship platform that can give people education and the need to maintain integrity, because this industry is full of conflict of interest. Ideally is you thinking of me as a bridge. Now, is Forex a scam? That's a good question that OPP asked. When we talk about Forex being a scam, you're looking at this kind of headlines. This was the year 2021 when a company, and I used to receive a lot of these stories myself, people coming to me in my inbox saying, I've been scammed by this person, I've been scammed by these people, investigate them, do this, do that. And through that curiosity, I realized it all boils down to specific things, because this was one company, as an example, that scammed people of 1 billion. I want you to notice the dates. This was between October 2013 and September 2014. In 1 year, this company made that kind of money, all right? And people lost a lot of money. Now, what was the catch? The catch was a promise of a 5% commission per month for every new member an investor brings in, all right? And it goes on and on and on and on. So the minimum investors were required to part with was 25,000 at the time. And people sold their land, people sold a lot of their substance just to get into this. Some people made money for a month or two, but at the end of the day, when the DCIO wrote to central bank seeking to establish whether this company was registered by the regulator, it turned out not to. And this is where a lot of people don't do due diligence, all right? And, they're all these stories. This is someone who lost 750,000. As an example of what happened. We go on. The thing I always say is, if it smells like a scam, it is a scam. You will always have a gut feeling, but most people will ignore that gut feeling. But if it smells like a scam, trust me, it is a scam. This is another Ponzi scam. Kenyans lost millions. It's another headline in 2021, not too long ago, where people fell prey to an online Ponzi scheme disguised as an e-commerce and a referral app named Amazon Web Worker Africa. So you can go on and on and on. I don't have time to go through all these things. This is another one about crypto, where people lost money. And I'm not saying that all these things about, trading are all scams, but I want to give you an idea of how to tell whether something is a scam or not very quickly, especially when it comes to Forex trading. Detecting scams in the Forex trading industry involves a couple of things. One is you being vigilant and questioning. And there are red flags that you will always see. And I've done my investigation and I've condensed all these things to a couple of points. One, when you hear someone telling you they're guaranteeing you profits, be very wary of any service or any broker or any person promising guaranteed returns or no financial risk. Forex trading always carries risk. There's a way to manage it. Now, the second thing is unregulated brokers. Always check if a broker is regulated by a reputable financial authority. And I repeat, a reputable financial authority, because not all authorities in all countries carry a reputation. And I'll give you our local example, the Capital Markets Authority, all right? So unregulated brokers are often scams. And I was scammed myself by a broker who was based in South Africa. And I had put my investment to trade indices and stocks. And I didn't do my due diligence in my formative years. And when they were being investigated out of malpractice, my accounts were frozen. And my money up to today, I'm not able to access it. That's how bad this thing can get. The third thing, high pressure sales tactics. Scammers will always be aggressive. They will use aggressive tactics in calling you, in texting you, or emailing you to pressure you into making either large deposits or making quick decisions or making quick commitments. So be very, very concerned about this. The other thing is lack of transparency. Legitimate brokers provide clear information. And I teach this in my class where you go through different things to understand how then do you check transparency? Because most of these people who are not legitimate will hide their trading practices and hidden fees and costs that you will not see on the surface or on a web page. Unrealistic promises. Be very cautious of claims of high returns. If I come and tell you I'm guaranteeing you that every month you'll make 50%, you should question how is that possible? And just have a little bit of understanding how that is affected. Where you find there's no effort or somebody telling you there's a secret I have to beating the markets, you can never beat the markets. These are giants that have existed before you and I were born and will continue existing. There's a reason why the JP Morgans of this world, the Morgan Stanleys of this world are big the way they are. These people are smart, all right? So these unrealistic promises, again, is a lot of what you see on social media where somebody floats around, huge sums of money, driving fancy cars. They're in Dubai in a fancy hotel room with champagne on the bed and so on and so forth. And a lot of young people are fallen prey or victim to a lot of these things. Now, the other thing is excessive fees and hidden costs. Some scams make their money through high fees and undisclosed costs. There's something else that has been happening recently, especially with the advent of AI. So you have firms where somebody will clone a website and you will not notice that it's actually a clone. It mimics the names and the websites of legitimate firms. Always double check the firm's credentials. Pay attention to and take note of the details. And then online reviews are very important and testimonials. Also check out what are people saying about the firm and so on and so forth. Now, Forex is not a scam, all right? OPP, it's not. And to everyone else who thinks it's a scam, it's not a scam. Let me explain why. This market size per day, what is traded in terms of volume in this market is 7.5 trillion US dollars. I'm not saying in a week or I'm saying in a month, it's a day. This is based on a report from, and I like quoting sources, from the Bank for Investment Settlements. Basically, this is an international financial institution that is owned by member central banks, what you will call like maybe COTU, in our case, just to make it, clear and simple. So its primary goal is to, foster the international monetary and financial cooperation while serving as a bank for central banks. So 7.5 trillion is being traded daily. How is this being traded? 24 hours a day, 5 days a week. The markets in our local time open Sunday midnight. That's why I said Monday is my favorite day. So it goes all the way to Friday midnight. Over 100 currencies are being traded in this market. When you sleep, there's trading going on. When you wake up, when you're driving to work or you're commuting to work, somebody is making money somewhere. Now, who are these people who are trading Forex? There are so many participants in the Forex market, and they can be broadly categorized into a hierarchy. And in no running order, you have central banks and governments that trade. Because of time, I'll not go into the details of that. But these two are at the top. When you hear government is doing a deal with another government in another country, Forex is involved, all right? And currently, we talk about the shilling being so weak. You will hear some things that central bank is saying. They influence a lot of what's happening in terms of the exchange. We have major commercial banks. We have financial institutions or commercial institutions. This, I mentioned, like JP Morgan Chase. We've got Citigroup. You've got all these international banks that actually are participants in these markets. There are institutions that actually move money on behalf of their clients or on behalf of companies that are doing extremely expensive quotations. You've got multinational corporations, like I said, who are hedging against currency risk. So you have a company in Kenya, for example, that's opening a branch, let's say in Canada, and they're trading and they're doing business that's not necessarily related to Forex, but they have to pay salaries in Canadian dollars. How do they hedge themselves against risk when you have to pay salaries in another currency, in another country? You've got institutional investors and hedge funds. You've got retail traders. Now, this is where you and I come in. Our small money, in quotes, comes in here now, because as a retail trader, people range from being an amateur beginner traders to experienced professionals. We participate in the market for speculative reasons, not for hedging reasons. How I trade is for speculation purposes. Let me explain it in a simple way. By November last year, there were conversations around the industry that the shilling is going to continue growing weaker and weaker. There were political undertones to try and strengthen it, but it was not working. Now, when you compare what the shilling is to the dollar today, let me just ask someone to check for me. What's the current rate, the dollar to the shilling? I think I will allow maybe Mr. Chairman to do this for us. What's the current exchange rate?
Just a second, let me share it. Exchange rate. I usually use the Visa inside.
You can actually, how you can do it simple. Just go to Google, just type 1 USD to Kenya shilling. That's it. Anyone can do this. You will see the quotation, then you will see a graph next to that quotation.
166.
It's 166 today. Now,
yes, that's where
that's how crazy it gets. It wasn't that when we were in the month of October. So as a trader in the financial markets, what do I do then? If I had dollars, if I had, for example, let's say $1,000 in October, would I sell my dollars for the Kenya shilling in October? No. Why? I'm speculating that this dollar is going to continue strengthening. The shilling is going to continue getting weaker. And there are factors why the shilling is weaker. I don't have time to get into that. So if I had $1,000 in October and now I have $1,000 today, I'm going to be so much richer compared to someone who sold off their $1,000 in October. Basically, that's how Forex work. So we participate in this market for speculative purposes with the aim to profit from those currency fluctuations. And there's a way of, I'm seeing Jenny saying 161. I've not checked this morning. I just woke up to just get into this, so I'll check later. But you get my point. If you look at that graph, you can go back 5 days ago, you can go back 1 month ago, you can go back 1 year ago, 5 years ago. You can actually see where the shilling was 5 years ago to where it is today. It's quite interesting. So what do you need to trade in summary? What you need to trade is one, you need basic Forex knowledge, understanding the Forex market, how currencies are traded, and the factors that affect currency movements is important. Number two, you need a trading account. You'll need to open a trading account with a reputable Forex broker. You can't trade without a broker. For us as retail traders, you have to use a platform that is offered by somebody. Now, this involves choosing between different account types. Again, I will not go into the details of this, but it's not complicated stuff, but you at least need a trading account. Same way, you'll go to a bank, you'll want to open an account with a bank. There's a reason why you're opening that particular account type. So the banks will give you different offerings in terms of the accounts that you can open. So whichever one you choose, you can open one that you can only access the funds once in a year. You can go for one that has some very, very good offerings in terms of it's for education purposes, school fees, if it is savings. The reason why you choose that account type is because you've considered what is going to be beneficial to you. But there's also something that the banks also benefit from. Then the third thing is your capital. It's important to think this is a business. This is not just a side hustle like you spend an hour and that's it. You treat it as a business. And the respect that the industry has lost to scammers is because what is sold is gambling. Forex trading is not gambling. This is a serious investment. It's a serious business, all right? Now, the other thing that you'll need is a trading platform. This platform, like I said, is offered by a broker. So you'll also need risk management. You'll need a strategy. You'll need to understand how do you then capitalize on your understanding of how much of your capital you're willing to risk per trade, for example. How much money are you putting in this business? Like somebody who's opening, let's say a mamamboga kiosk, because that's the refined example we always use every day. Watu boda boda, mamamboga, and whatnot. For that person buying a boda boda, they have to find out where can I get the cheapest or the most affordable boda boda to run my business. When they fuel and they charge you from point A to point B, need 200 bob. There's a way they will factor in their profit margin. The mamamboga, where are they sourcing their mboga? Are they paying license? What taxes are they paying? So even the mamamboga will factor in all these things. So when it comes to Forex trading, you don't put in money because you have money in account to dispose of and just gamble your money away. You have to consider what is your risk management strategy, all right? Then you must have a trading plan, a well-defined trading plan that outlines your strategy, including your criteria. Why are you buying this currency? Why are you holding on to the dollar? Why are you holding on to the Kenyan shilling? Why are you buying the pound dollar? Why are you buying the Canadian dollar? And so on and so forth. Then some of the things that you will need to consider is economic calendars and news sources. Like I said, my background as a news reporter and as an investigative journalist has given me an edge to understand how news affects the markets. It's crucial to understand these things. And again, they're not very complicated. They are not. Look at what happened to Ukraine and Russia, the war between Ukraine and Russia. A lot of people didn't understand at the very onset what this meant because we are so far away. If I tell you right now to point with your finger, Russia iko wapi, you'll not be able to tell. But you're here in Kenya, you're running your business, you're going to work. But how did that war affect us? How did it affect the entire world? You'll need to understand what Ukraine produces. You need to understand the oil factor. If you look at the war between Israel and Hamas, for example, I've heard politicians say that the reason why we are where we are is also because of that war. But politicians will say this casually. But honestly speaking and fundamentally speaking, how does that affect you and me? You will need technical tools. These are now things that you acquire once you get through maybe a class or a mentorship program, or you get somebody who will teach you how to actually trade. Then emotional discipline. The thing about Forex trading that I didn't realize when I started and later on, and I came to understand it, is Forex trading as a way of bringing out a character you didn't know you had. Basically, inaweza kupiga very good character development. And a lot of people who have come to me asking me, Dennis, I want you to teach me this thing. How do I go about it? I always have some questions. And 90% of everybody who comes into this has lost money at some point, or they know someone who lost money. And that's why you'll hear people saying this thing is a scam, because either somebody gave someone money to trade for them, and because they're not licensed by CMA to actually do money management, they lost their money. All right. Continuous learning, you need an internet connection and a device. You need a broker who's regulated, and you need to do your good research on which broker you want to use. And this is just a simple example of this is January 13. So Forex is as simple as this. You're going to Dubai, you're going to the US to visit family or friends. Now look at what that Forex kiosk will do, that Forex bureau in town, and there are so many. I want to ask you a question, and I want you to be inquisitive. Walk around CBD, count how many of these shops have actually opened in the space of like 1 year. Just walk around, do your research. One street, go to another street, you will be very shocked. And I'm telling you this practically, you'll be very shocked how many of these businesses are opening every day in town. You need to ask yourself, why are they opening? Who owns these businesses? How are they making money? An example on January 13, when they were selling the dollar, you will buy the dollar at 161.50 shillings, $1. All right, that's what they will sell to you. But if they're buying that dollar to you, it's at 158. Now, what's the difference between 161 and 158? That difference is their profit margin per $1. Now, think of the multiplier effect. How much money are they moving in a day in different currencies? The highest was actually the sterling pound. If you want to buy the pound today and you want to go to the UK, is super damn expensive. This is right on your face, okay? Now, I want you to ask any questions you might have. I'm already seeing some, but thank you so much, OPP. That's briefly what I could squeeze in the short amount of time. I know there are people who might be confused. There are people who have so many questions. I will try to answer as many as I can. And I think I'll just hand it over to you, Mr. Chairman, to moderate this. How do you want us to do this?
Okay, thank you so much. Antonia, you're going to help us with the questions. You're going to help us sheet the questions for Dennis from the chat, and then he is going to respond. And if you have any other question, kindly just write it on the chat so that we save on time.
Good morning, everybody. Thank you, Lady Noel. I'm going to read the questions straight away. And one of them is from Peter. I don't know whether it's a question or it's a request that Mr. Dennis to share the presentation document. Yeah, and Paul Peter had answered that. We normally share this recording on our YouTube channel after 2 days or 1 day, so it will be shared. The other one is what is the importance of 1, risk management, and 2, trading psychology? And maybe I can add one more from Christine. How do you identify a genuine trading platform? Thank you.
Okay, the one was asking about the importance of risk management and trading psychology. I'm not sure whether they're actually traders or that person is a trader, but this is a very targeted question. Okay, so I will try to really simplify this. Now, the importance of risk management is a very critical aspect. It's actually one of my best subjects in class. The critical aspect of this cuts both ways. One, it's personal finance and institutional finance. I want you to think of it that way. You have a budget that runs your house. You have a budget for food. You have a budget for transport. You have a budget for either rent or mortgage fee and whatever it is. What you're doing when you're budgeting, ideally, basically, is the simplest form of risk management. You're trying to balance your books so that at the end of the month, if something was to happen, landlord akuji kuitisha pesa because you didn't pay rent and stuff like that. Now, when it comes to Forex trading, how risk management applies is, one, you want to protect your capital. So risk management helps you identify what are the potential risks, sorry, what are the potential risks before they actually occur. I always say this, that Forex is one of those, sorry, Forex is one of those things that, you can decide how much money you want to lose. You can make that decision. And how you do it is implementing strategies that can minimize or mitigate these risks. Basically, you're trying to protect your deposit. So if you're going to the market to buy a currency, you are mitigating against any form of loss, because like any markets, there's a likelihood, for example, for someone who bought 20 packets of milk in a shop somewhere, they will buy those 20 packets of milk. For example, they bought yesterday, and they wake up in the morning today and they're expecting customers to come in to buy. There is no guarantee that today morning, everyone wants to have tea with milk. Chances are, today morning, the 20 packets are all sold off. Tomorrow, you might assume that if I buy 20 or I add 5 more, now 25, I'll still sell all of them. Kesho ikifika, kumbe watu wanataka kunywa uji. They don't want to have tea. So what happens to the 25 packets of milk? If it doesn't have a fridge, they'll all get spoiled. What is that? That's a loss. In trading, when you're putting your capital, you're thinking on, one, how to minimize losses. Two, you're thinking of capital preservation. As an investor, you're looking at the long game, and you're looking at what's the long-term sustainability and growth if I get into this market. So risk management basically ensures that your capital is not eroded, okay? Now, the other thing it helps you is improve decision-making. When you understand and analyze risks, you want to buy a piece of land somewhere in Nairobi. What are the risks that you either get a fake title deed or you might lose your money and da-da-da-da-da? You have to do due diligence. So when you're putting in your money, you're buying that land for whatever purpose. You want to build a house, or maybe you're buying it for speculative purposes, that in 5 years, the government says there's a road that will pass next to your plot. There is a sewerage system. There is all these amenities and infrastructure. What will that mean in the next 5 years? It means that the value will go higher. But when you're putting in your money today, you're thinking, I'll have to wait for 5 years to maybe make profits. Now, how do you mitigate that risk? If all you're doing is putting your eggs in one basket, then you might actually be very surprised, because as we know, and you and I in Kenya, as you know, this can end up being promises that will take another 20 years. There is no guarantee that that road will pass there. So you are doing speculation. But when you're in a speculative market, risk management is important. I hope I've really answered that. Now, when it comes to, what was the other question? Trading psychology, yes. Now, trading psychology is so important because it's about your mindset. It's about your emotional discipline. Now, there are two emotions that are involved in trading. One is greed. The other one is fear. Now, the question you need to ask yourself, are you more of a greedy person or are you more of a fearful person? You may not have an answer to that now. Trust me. When you start trading, that's when you'll realize you are such a greedy fellow or you are such a fearful person, because I've seen students who, they know how to trade. They understand everything. But to press that button to buy or sell, they are so scared because emotions are involved. They so much fear even losing 1 shilling. There are people who are like that in any business. That's why I earlier said when I started, this is not for everyone. There are people who are risk averse. There are those people who don't take any form of risk. They are okay where they are. So the importance of psychology affects your decision-making, affects your discipline, affects your risk tolerance, and how do you deal with a loss? It's one of those things that I also ask students, for example. So how do you handle stress? Are you the kind of person who goes quiet? Do you eat a lot? Do you go to sleep? What do you do? Do you take a walk? Do you go for a run? What do you do when you're under stress and you have to make decisions under pressure? So understanding and managing the psychological impact of maybe a loss, for example, is so crucial because it helps you either learn from your mistake without having these overwhelming feelings, And also the psychology part of it helps you in confidence. Once you know what you're doing, it boosts your confidence to trust your judgment and it enables you to be decisive and manage whatever you're doing quite effectively. I hope I've answered those two. Sorry, remind me, the other one was which one?
How do you identify a genuine trading platform?
Okay, how do you identify a genuine trading platform? Whoa, there's a lot. This question is so loaded. Because of time, I'll try to maybe just point out a few things very quickly. You have to, one, check the regulatory compliance. Like I said, in Kenya, we have what we call the Capital Markets Authority, CMA. Having a broker that is regulated locally is an advantage. Why? You have a place where you can go to in case something has happened to your account, in case you feel there is an injustice, there is a point of contact. Now, when you're dealing with a broker that is so far away, for example, in my case, I said I was doing trading with a South African firm. They had no office in Kenya. They were not regulated in Kenya. When the accounts were frozen and my money was frozen there, how do I go to South Africa? Because I tried making phone calls, I tried doing emails, it was not working. But how do I then go to South Africa, look for this company and say, you people have my money, I want my money. So that's when I understood being licensed and being regulated is so important. So the platform that you're using has to, one, be licensed and regulated, and not just regulated, but by a reputable financial regulatory body. I don't want to mention countries, but there are certain countries in this, world and in this space where they dish out regulations the way you walk in, you walk out. As much as you have money to pay for it, you walk out. And they're licensed. Now, you sitting in Kenya, you have no idea what's happening in that country or how strong their laws are. You think because they are licensed and regulated there, then you can just trade. It doesn't work like that. So there are sites, there are things that you will need to check out your due diligence from, the site. I wish I had time to show you an example. If you look at a brokerage website, they are required by law to share their certificate number. They are required by law to give you the disclaimers and the risk warnings and so on and so forth. So there's so many regulatory bodies. The strongest ones are in the US. You've got the UK. You've got, which is called the Financial Conduct Authority, FCA in the UK. You've got the Australian Securities and Investment Commission. It's called ASIC. So some of these, I'm just mentioning those few. They are very strong. You look at their countries and how they practice law. They're very strict to protect their citizens against fraud, all right? So the other thing is check security measures. The platform that you're going to be using, for example, and I don't want to get too technical with this, but the things we call standard encryption protocols that protect data, because when you open an account, you're sharing your data, you're sharing your personal information. How do they protect your data? And you know what it means when you talk about data protection, especially in this day and age. Your data can be used by scammers so easily. The other thing is transparency. You will need to understand what are the fees and the costs that they're charging you. Genuine platforms will generally show you and clearly outline their fee structure. When we talk about commissions, how do they make money through commissions or things we call spreads and any other additional charges? They have to be very transparent. If they're very fishy with how their language around their structure, and when you engage them, you need to ask these questions. Then, no, you are not dealing with a straightforward person. There's so many, but those are the few that can help you for now.
Thank you. There's another question, but I think that one you'll answer when you're done. What do you charge for your training? I believe that one you're going to answer when you're telling us about the Dennis Okari Academy. Okay. So another question, where can one start if they want to trade regularly, but not full-time?
Where can one start if they want to trade regularly, but not full-time? Well, like I said, when I started, I was already working. All right, so it was a full-time job, ours was not 8 to 5. It was actually 8 to 9 because, like I said, we clock so many hours. I can go to shoot a documentary in Kisumu or out of the country in Uganda. I will think maybe I'll do it for a day or two. Ends up taking me a week to do the investigative piece, the scripting bit of it. So there's so much that goes on. However, as I was doing that, I would spare at least an hour to look at the markets. Like I said, Forex trading, you can do it from your laptop, in your bedroom, in your living room, at a cafe, in your office. I used to have, for example, in my office, 2 computers. One was just on the side, I'm just looking at the markets. The other one, I'm just working. So during my lunch breaks or other, breaks, I'll just go check out a few things. So you can be flexible. It's about your commitment and how much time you want to put in, really. So how do you then start? You just start. A journey of 1,000 miles starts with just one step. You have to take those baby steps. At least try to crawl before you can walk and run. So educate yourself. Understand the basics. Learn the different markets. There's a difference between stocks, Forex, and commodities, all right? So how does Forex work compared to, other markets, for example? How do you look at the different market hours? The beauty about Forex is it's 24 hours a day, 5 days a week. So it offers you the flexibility for those who have limited time or you're working a full-time job. So you have 2 hours or 3 hours in a day. So in that case, you might want to consider markets that actually match your trading style, your risk tolerance, and those kind of things. Now, you need to select a trading platform. I think I went through that in my presentation, and what you need to do, you need to practice on an account we call a demo account. Basically, a demo account is where you practice trading with virtual money. So it's not real money. Many brokers will offer you that. So before you can put in real money, they will give you an account where you can actually practice your strategy and your trading using virtual money. Now, this step is very important because it gets you to a comfortable level where you now are confident enough to trade on the platform as you understand how things work. So just start. That's all I can say.
Okay, thank you. So if I have some funds to invest, can I trade Forex directly on one of those reputable platforms, or do I have to engage a broker to handle the trading for me? The same person has asked for charges for brokerage services on average.
Okay, it depends with broker A to broker B. That's what I will tell you. So different brokers have different charges. So there's a broker who, will charge you a commission and a spread and other costs. There's a broker who will only charge you spreads. Now, when I talk about spreads, it's the difference between the ask price and the bid price. You see, remember the chart I showed you? If you want to buy the dollar, they will sell it to you at 161. But if you want to sell your dollar, they will buy it at 158. That difference is where they make money. Now, when it comes to brokers, how they make money, that's one of the ways. So we call it spread. So they will give you a certain, price figure for you to either buy or sell. It's normally not a very big difference, by the way. If you're trading the major currencies that are attached to the US dollar, for example, you've got the US dollar, Japanese yen, you've got the US dollar, Canadian dollar, you've got the pound, US dollar, you have US dollar, Canadian dollar, for example. So the charges vary from broker A to broker B. So if you tell me, for example, what about this broker, then we're able to look at it, and then I can tell you, okay, so this is what these guys are doing, and this is what they will charge you. Now, to answer the first question, normally I advise, if you have funds to invest, make sure those funds are not from your savings. Make sure those funds are not school fees. Make sure those funds are not an emergency fund. I have to be very practical and very honest with you. There is normally a quote we normally use in Forex trading where we say, never trade money that you're not willing to lose. Question, is there money, generally speaking, that you're not willing to lose? If today you just lose 1,000 shillings, even if you had 100,000, it ceases being 100,000. Itakuma. So I always say, make sure if you have, for example, money on the side, it's money. In the event you lose it, you will not lose, well, you might lose your sleep, but you will not, take your life, or you will not do something crazy. I hope I'm clear with that. So it's very easy to get, and that's why when I talked about scammers, that high pressure is to force you to just pay, put in money. So what will use a ng'ombe in those scams that we looked at earlier, what will use a mashamba. So when they realize that these people are actually scammers, somebody doesn't know where to start from. They have no other place where they can basically go back to. So if you're working, for example, my advice is whatever you get at the end of the month, if you want to pursue this as a business, then take a portion of your salary, the way you will just break it down into savings, into school fees, into transport, your normal budget. Have an extra budget where you're saying, this is for my trading. Then give yourself time. As you're putting in money every month, you are learning how to trade. Remember, you will not learn how to trade today, Monday, and by Friday, you are trading a live account. That's a lie. And that's what scammers will tell you. You will never learn how to trade Forex in 1 week and start trading in 1 week. It takes weeks, takes months. So to gain that confidence, as you're gaining that confidence in 2 months, 3 months, 4 months, 5 months, you're putting in some money on the side. So on the day that you want now to trade on a live account, that same money is what you put in. And then you can comfortably say, okay, I've practiced my risk management. If I lose just 2% of this amount, I am still okay with it. I will still live. My kids will not be affected. My family will not be affected, and that sort of thing.
Okay. Thank you so much. So there's another question that I believe you've answered when you're answering this. So someone was asking, what's the best advice Mr. Deno can give to a person who wants to learn Forex trading? I believe you've answered that. And then Melvin is asking, list the top 3 legit trading platforms other than your own, which you would recommend. Maybe you can couple that with the minimum amount you need to start Forex trading.
Again, these 2 questions are still on the brokerage firm. Now, to list the top 3 legit trading platforms, what is legit? So there are different brokerage. There's so many brokerage firms that I've used in the past. I've used, for example, IC Markets. I've used, and now currently I'm using Xness. I've used Xness for a while, and there's a reason why. And so that I don't sound like I'm selling Xness because I'm their brand ambassador, I will avoid going into those details for now. But there are advantages and there are things as a trader I look at. So when I'm opening an account and I'm trading in that account, it's because I have my own personal objectives. Now, my bias may not necessarily be your bias. And let me explain it this way. It's like going to a bank. When you have, let's say 100,000 shillings, you want to go to this bank. You have an objective while you're taking 100,000. What do you want to do? Which type of account do you want to open? So they will give you different offerings. Now, the person on the other counter is opening an account, but what the objectives are totally different. So if both people come out and somebody asks them, which is the best bank? It may be a bit difficult to answer because someone might say, okay, Bank A is good, but why is it good? Is it because of that particular trading account that gives you good trading conditions for yourself, but maybe for other accounts, they're not really good? It's very subjective. However, when it comes to choosing which one is legit, there are websites that you can go to, like peacearmy.com is a platform where you can go, put in the name of the broker, check out the reviews, check out what people are saying about them, check out the details of what they offer, the instruments, the costs, where they're licensed and regulated and that sort of thing. So I can only mention the ones that I've used in the past, and those are the 2 that I've personally used. There are so many others, but if I say it openly here, I'll be biased because I have to go into the details why I'm saying broker A is good. It's because there's an account tag they have. For example, the South African brokerage firm that I used at the time was not really good when it comes to trading currencies. They were very expensive. Their pricing model on currencies was expensive, but their pricing model when I was trading indices was, I think, one of the best. And that's why I think I fell into it, because they were giving me a good pricing, but they were scammers. So if somebody asked me at the time, which one is the best when it comes to trading indices, I would have said that this is the brokerage firm. But they were regulated in South Africa. But again, I don't want to go into the details of how reputable they are and that sort of thing, but they were not necessarily the best at the end of the day. It was cheap, but cheap is expensive. What was the other question?
Sorry, the other question was, what is the minimum amount? What is the minimum amount you need to start Forex trading?
Great. Now, this again depends on the type of account you're opening with a broker. Brokers are different. The minimum I can say with many, you can trade with as low as $5 or even $50. Question is, that's the minimum you can put into trade. But what's your financial objective? If you're the person who's expecting to make 100,000 at the end of the month, definitely Your $50 account may not necessarily work. It's not going to be, let me use this word, it's not going to be, oh gosh, I'm looking for this English word. It's not going to be real. Let me put it that way. Okay. So you will see a lot of people, and this is where the scamming comes in. People will tell you how much money they're making in Forex, and you'll see on the table a lot of, banknotes, a million and this and that. They will show you the cars. And so they're selling you the dream. But what will it take you to achieve that dream? That's not what they will talk about. They will not show you what lot sizes they're using. They'll not show you what capital they've put in. For you to make $1 million, for example, in a month in a trading account, can you honestly say you started with a $5 account? It's impractical. It's not real in any world, in any word of this, in any sense of the word. It's not real. So it's not magic. So if you're putting in, for example, $1,000, you can say, reasonably speaking, this is how much I expect to make at the end of the month. It's not $1,000. It's not $200,000. No. But is it something that's going to sustain you at the end of the month? The answer is yes. When I started trading, and I'll give this practical example, I actually took money from my dividends. That's from my circle. Back then, that was 2016. And the mistake that I made back then was I took these 100,000 shillings, I put it in my live account, started trading because somebody told me, they know, ukiona market ikifanya hivi, you do this. Ukiona ikifanya hivi, you do this. And me, I was just following blindly. I had no idea what I was doing. Trust me, not so many hours later, I lost all that 100,000 in like 4 seconds. In a flash, I lost all that amount. I was so stressed and depressed. I deleted the app from my phone. I said, this thing is a scam. I said, there's a witch doctor who just knows or saw what I was doing because I'm placing a buy. The thing is red. It's a loss. I put this, it's a loss. I said, no, there's someone who's watching what I'm doing and they're controlling what I'm doing. And it's because I didn't have a proper understanding. All right. Today, if you ask me, if I have that same amount of money and I put it into an account, there is no possible way. And I normally tell my student, there's no possible way. If you follow my risk management strategy, you will never blow an account, never, ever, because there's a science to it. There is a discipline to it. When I got that discipline, that's what has helped me through the years to where I am today. And I'm trading full-time. Everything I do, I am doing it full-time now, plus many other things that I'm engaged in. But I can tell you, I've seen the fruits and the benefits of being realistic about what you're putting in as capital and what at the end of the day you expect. Think of it this way. Look at your salary. Calculate your salary or the amount of money you make in a month. Divide it by the hours. Look at how much you're getting paid or how much you're valued per hour. Then if you're looking at your salary and you're getting into trading, I normally say, realistically speaking, look at targeting exactly what you're making in a month. Then ask yourself, how much as the company or the business you're running, how much capital did they invest in for you to make that money that you're making at the end of the month? It can't be $5. You can't make $1 million from $5. Impossible.
Thank you so much. Unfortunately, guys, we'll have to stop because of time. So, Mr. Dennis Okari, I am only going to give you a minute or two to tell us about your academy, because I've realized so many people want to know how much you charge and stuff about your academy. And then immediately after that, I'm going to welcome Dr. Melvin Lima, who's going to give us a vote of thanks. Thank you.
Now you can be on video. We stopped the sharing. Then you tell us. Yes. We just did it.
We want to put a face on the person who is telling us about money.
All right. So very quickly, I will not even take 2 minutes. Like I said, I'll take 1 minute. This is normally what I like doing. My process is very, very simple. I like knowing the people I'm engaging with. Like I said, I like understanding the motivation. And I do seminars every first Saturday of every month at 20th Century Plaza, partnered with Nairobi Garage, where I do my seminars. There's a fee to the seminars. I normally take people through what I call a crash course. A crash course is ideally like spending the day. There's breakfast, there's everything. I help you with all the tools that you will need. I normally charge 5,000. It caters for the resources, the tools that I'll give you, and all that. So we spend, the day talking about Forex. You have a one-on-one session with me. We talk about so many other different things that I may not be able to talk about here, but that's one part of it. Okay, so the part about now doing the long-term mentorship, I take people through a questionnaire, because I avoid getting people on board who are coming with either wrong motives or they don't clearly understand the objectives. And normally I will advise, as part of being diligent and also having integrity. I care about that one so much. So I normally will want to understand, why do you want to get into this? And I can tell you this may not be the best time. The second thing is understanding your level. You're a beginner. Are you an intermediate? Are you at an advanced level? So I will charge differently, and I will advise on the weeks or the hours that it will take you to learn what you want to learn. Are you a full-time? Do you want to do full-time trading? Do you have a job you work 8 to 5? How much time can you allocate? So I take people through a questionnaire. Once I get that understanding, then I'm able to advise and tell you, it will take you this number of weeks, and these are the lessons that you will need, sorry, for you to be able to be proficient in trading. So what I'm going to do is I'm going to share my contacts. Am I still sharing? I'm not sure whether I'm sharing my screen.
No, you're not sharing, but you can put the contacts in the chat so people can see them.
Let me actually do that right now. So I like doing it at a personal level. So I can't tell you that this is how much I charge. I can only advise based on needs and understanding where you are. So there are different things I look at once we go through the questionnaire. It only takes 30 minutes. So I normally do a Google Meet with you. And once I take you through the questionnaire, it will also help you question your motive, question where you want to go, question what you want to do. I've had people who come in, they're ready with money. They want to actually get into the class and start trading. And based on what we go through, I normally tell them, okay, do this, go to this site, read about what this is, take time, take a week or two, then come back to me with an answer, whether this is really what you want to do and how long you want to commit to this. And then I can, get you on board. So I've shared my number. So my number, is your training one-on-one. I have two styles of teaching. One is on-demand video. So I have an online school where I enroll students. You go through the videos. The beauty about it is, if you're a busy person, you can always go back, watch and rewatch as many times as you want. Up to 1 year, you have access to it for a whole year. So you can always go back, revisit. But then every week I do live sessions that are now one-on-one, where now we do a summary of what you've learned, what are the challenges that you're facing, and that sort of thing. So that number that I've shared is my WhatsApp number. You can chat me up. You'll be talking to me directly. And then if you're interested, we'll be able to have that conversation from there. I actually took more than 2 minutes. The number is very simple. It's 0707 18
18.
Yes.
Okay, thanks.
Okay, thank you so much. Dr. Melvin Glima.